Okay. Um, as you can see right now, what we have is the company AMD chart that I was showing you this morning. So this is a what we call a this is what we call a this is Thinkorswim. This is the platform in which you can trade, right? Buy and sell stocks of different companies. So this is AMD. All right. This is just this is just the chart. Okay, this is a chart. Okay. So if you can see here at the top, it says 227, and it says that was March 4th, 2025. No, 24. This is March 4th, 2024. All right, and then when you go here, this is today. This is what I was talking about earlier in my previous videos when I said that in the morning it gapped up from here to here, like the jump up, right? This represents, so this is 170, actually it was here, right? The bottom of this candle 158, and it jumped up all the way to 227 to 226. All right, that's today. Okay, now what you do is you can either buy the stock and then your stock will have gone like $50 up, or you can do like me. What I do is I buy what we call options contract. So options contracts are those contracts right here. You see, those contracts expired 10 October, the 10th, October 10th, October 17th, 24th, 31st, November 14th. So what I will do, me myself, is I will go and play time. So I will go and like right now I'm on Tesla, but let's go to AMD because this is what we play today, right? So I will go 6 months from now. So we in October, November, December, January, February. I will go to March, and I will go and see how much is it that a contract cost. So you see here a contract costs $30, right? But that's $30 is $30 per share, and the contract is 100 shares. So it will be 30 multiplied by 100, which is 3,000. So this contract is actually cost, for one contract at least, it will cost $3,050. Right? That's why it costs. Right? So you gotta click this, right? And then you buy the contract, right? So to break down real quick, what it means is this is the price of a contract. This is what it goes for. All right, you see how it moves ups and down. And if you come here, you see how it says 58,058. That is what we call the delta. That means, so remember the stock, how it went $50 up in the morning. That means that for every dollar, right, for every dollar up, this will go 58. You got to multiply by 100. So that's 0.58 by 100. That's $58. So for every dollar that the stock goes up, this contract will go $58 up. So for every dollar, this will go 30, 35 plus 58 for every dollar. So today, for example, if you have bought this contract at $3,000, your contract will have gone what? if you do the math, do third, you do, so he went $50 up, right? And then here it says it will go $57 up for every dollar. So you will multiply 57 by 50. So do the math. 57 by 50. How much is that? 57 by 50 is, hold on, let's do that. So it's 2,900 or 2,900. So in the morning, if you had bought this at 3,000, now you see how it went down, or did it go up? Yeah, it went down. 29 now. You see how it goes up and down? That's because the stock itself going down. So okay, so so yeah, for every dollar, so it will have gone up 3,000. So you will have bought almost 100%. You will have bought the 3,000, and this thing will have gone 2,900 up, almost 100%. Okay, right? This is the type of math that we're doing. Now you understand that now you want to see how this contract move. You saw how the stock moved, but look how the contract moves. So to see how the contract moves, you click here twice, then you go up, you copy this right here, right? You copy this, you go to the chart, and you paste. So I can either create a grid, second screen. So this is the stock itself, and I'm gonna put the contract. So it said the symbol could have not been found. How? Okay, we gotta go back. We gotta copy this properly. Right? Go to here. And there you go. Okay. So this is how your money moved. Right? Look. So here it says this contract, if you have bought this contract, it says you had this morning you were at, so don't forget you multiply. So 9.4 multiplied by 100 is 900. You were at 940. At 9:30, that thing jump up to all the way here, which is 43 multiplied by 100, 4,300. So you went from 900 here to $4,000 right here. This is the type of movement. While here in the stock, you went from 150 to 227. That's $50 that you made, right? If you had one share, you made $50. But here, if you have one contract, you made $4,000. So that goes $50. That goes crazy, $3,000. You see, this is a contract. This is what we're doing, trading. This is stock. So if you want to buy the stock that you hold forever, you just accumulate stocks after stocks. And this is one of the way to make money using this. And this is called options contract. You see how it says 3,000? It says 30. In the morning, it was 9:21. In less than a day. That's 30 minutes. That jump off, that's represent, like I can show it, but that is the time frame is, you see, I can see time for a year and a day. If I go 1 day, 1 minute, look at this. It jump up here in 1 minute, bruh. Each candle represent a minute, right? So in a minute, that thing went 43, and then it went down because the stock went down, right? The stock was here, and now it's here. Okay? So if you want to understand more, come to my school community, and we talk about it. How to make money in the stock markets. Let's get it!